Hey, hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is a Monday, and it looks like the market has moved decidedly upwards, which is great, actually. And so we're going to just get into it here, just kind of give an idea of how the market is trading and what trades maybe that you might consider making. So here we go. Basically, we are in sort of looks like we have maybe done the test of the low, and hopefully we're back into correction land. I'm hoping that's the case. Definitely is the case with the with the Nasdaq. I mean, it's definitely moved up 3.10%. Fantastic. The S&P's up, so is the Dow Jones. We are a little bit shy on the volume on the New York Stock Exchange, but the Nasdaq volume is definitely up. So it looks like we may be moving to, we may be moving on up. So moving on up to the east side, just like to the deluxe apartment. Here we go. Well, the spider looks great. This is just as a few minutes ago. And you can see we're just moved right up from, this was the low here that we made, and we have just moved just steadily up. We broke our trend basically in the last week of August. Then we came down, we bounced, we went down, we tested at about the 320, 318 level. It looks like and then we moved up. We bounced on the 50-day moving average, and we have moved up, and we're moving up decisively today. The only thing here, it's a little concerning. We need a little bit more volume, but other than that, it looks like we may be hopefully coming back into the trend. And if we did, then we would move up basically to the trend line that would go up like that. So if we can get up to the 360 level on the spider, it's looking pretty good. So that's a very, very bullish thing that's happening. On the QQQ, and this is really where most of the great growth stocks live. This is where, Amazon is, and Microsoft, and all those other ones that are good. They live here. It's up just tremendously, $10.26 to $2.95. Now, the key level on this is about $2.75. As you can see, that's exactly pretty much where the 21-day, the 50-day moving average is. Because this is above the 50-day moving average, that means in the last 50 days, we are moving up and above, so this is looking very good. What is especially heartening about this is that we have all this volume here. So this is definitely a move. We see funds moving back into the stocks based on this. So this is a very, very, very good sign. We have and I just want to talk to you about a breakout stock. This is a stock alert that I put out on the action trade alerts. And by the way, it's super easy to get onto the action trade alerts to take, so that you could be, you can basically get them anytime these come out, basically just going to www.Dallas Trading Floor. That's where you can get the action trade alerts. But we sent out one on Breakout Alert on Cloudflare, and it has just done tremendously. It's at 57 right now. It's up 23%. This is basically a little bit of a blow off top, but just look at that volume, just tremendous. It is really moving nicely. This is the second really, really good breakout that we've had. The first being last week on the first being last week, and now this one. So it's just been very, very nice. Just wanted to show you how I'm playing this one, because this is how you can definitely make some money very quickly. And this is a covered call play that I sent out. I will probably be sending this out on the action trailers, just exactly how it happened. This is the chart that I was looking at. Of course, the action trailer came out when it surpassed this 45.28 mark, and then we sent that out, and then we had the gap up. Basically, what's pushing this up is that there's a lot of funds that are trying to move in to the cloud space, and as you can see, it's an increasing number of funds. We have excellent fundamentals. We do have earnings coming up on the 5th, so that's something to be concerned about. But the earnings last quarters were up 86%, and we definitely have a lot of things moving into here. Now, this is owned 56%, 58%, by funds, and this is what pushes up stocks. Basically, it's 8 out of 9 on the criteria. The only thing it really fails on is earnings per share. So here's how you do the play. It's not that hard. You just go in, you buy 100 shares, and then you sell a call option. I sold the November 11th 20 call with a $60 strike. That means that they can buy it back from me at $60 a share. Remember, I bought them for $53 a share, and then I'm selling for $60 a share. But by doing that, I get a premium of 2.85 or 285 if you multiply that times 100. So if you did this particular play, you will end up with an annualized return on this of about 163.8%. So very, very healthy return on your money. So about a 5.3% return on the option and a 12% return on the upside. So this is a very likely alternative. If it doesn't achieve $60, this will happen if the stock is $60 or above on November on November 20th. So there you go. That's how it works. For my current holdings, I'm in Oracle. I'm in Taiwan Semi. I'm also in Tesla, Sorrento Therapeutics, Fastly. Of course, that was the big one last week. It's down a little bit, but just slightly at 126.34. Also, I'm in Marvell. Now, Marvell is getting ready to pop, but it's not there yet. So we want a little bit careful on this one. This may pop on Tuesday if the 5G goes the way I think it will go with Apple. Apple itself probably will not move up all that much, but some of the component stocks, the stocks that are in the new Apple iPhone, are going to move up, and Marvell is one of those. Also, of course, this is the trade alert that we put out on Friday, and then, of course, it's moved decisively to the upside. A Cloudflare on that one. So those are basically where I'm trading now. So anyways, if you want to also get on the list, www.Dallas Trading Floor, and that will put you right on the list. So without further ado, let's get to the questions. Thanks for calling in. By the way, for everybody on TikTok, I'm simulcasting on YouTube. It's super easy. All you have to do is go to www.youtube.com, and then it's episode number 150. So that is on YouTube for everybody out there. So let's get to the questions. Thank you very much for waiting. Let's see. Okay. Wow. Thank you. Thank you. I was lucky. I was lucky to be able to find this one. It's my goal, hopefully, to find some of these breakouts. We're in a season when we may see some more breakouts. So try to get on that list, because I can't, unfortunately, talk to everybody. It's just impossible. But I can put out those trade alerts, and to get on those trade alerts, it's super easy. All you have to do is basically get on. There goes. Like and subscribe. Okay, on YouTube. Well, we do that too. But the easiest way to get on that list, www.youtube.com. I'm sorry, www.Dallas Trading Floor, and then you can go right to that, and it will give you exactly kind of how it looks. Now, I'll show you exactly sort of how it looks on the screen, so you'll know exactly where to go to sign up for those trade alerts. This is where the website looks. It says Dallas Trading Floor up there, and of course it's www.Dallas Trading Floor, and then just your first and last name and then your email address. Hit that subscribe button. It's totally free, and it will get you on the list, so that we can, when we have more of those trade alerts, then we can we can make some money, hopefully. That's the whole idea. Buy the rumor, sell the news. That is so true. That is so true. And that's a very good thing that you're saying there. You definitely buy the rumor and you sell the news. Now, why would you do that? Well, because when you have the news, it's sort of all factored in. This is why it's always a good strategy coming into an earnings season, like we're coming into, is to buy the stock on the run up to the earnings, then sell it the day of or the day before earnings come out. And then typically the stock will go down after that, and then you buy it back. So that's a good way to make some quick cash in earnings season. So that's kind of cool. And yo to you. Okay, so let's see. I have just some Apple I went. Okay, it went up to 125, but it seems like the buy pressure is at the highest level at 123. What should I do? Sell today or wait for it to go? Okay, here's what I Okay, I went up to. Okay, the question is where you're in it at. I do believe that Apple is likely to achieve, at least in a short-term basis, its highest its highest level probably tomorrow. And why do I say that, guy? You see, it sounds like I'm just pulling it out of the air. Well, actually, there's reason behind this. Now, if you'll notice, this is the Apple chart. It's moving nicely. It's up $7.17. I suspect that we're going to see it move up very, very close to its top, which will probably be tomorrow. Of course, the pivot is 137, but I don't know if it'll achieve that. So what I would do is I would try to sell this thing if it goes above 125, because I do think what's going to happen, and I could be totally wrong, but I do think what's going to happen is it's going to come up basically to where that blue line is, about 127.96. And then if it has enough power, it'll move beyond that. But I do think it's going to form a cup there. And so we might want to be careful, because I do believe that the day after the event, it's likely to move lower, at least for time being. Not overall, but the time being. So that's where I would be selling it. And I would definitely be selling it. Hey, Jim, are you holding TSM through earnings? Well, yes, I probably am on this one. I just kind of want to show you. I may be selling it. I'm not sure. It hasn't performed as well as I would have liked to have, but I'll show you kind of where it is on the small portfolio. This is the portfolio. And by the way, you can get access to this super easy. Just go to the website and I'll show you exactly where to put your first and last name and your email address, and then you can get right on that. But this is how I'm trading it. And as you can see, here we are with Taiwan Semi. I've basically been in this thing, let's see how many days I've been in it. I've been in it a while, actually. I'm up about 5% on this one. I believe I will probably sell this. I will probably sell this tomorrow, just because I do want to capture the profit. And I do think it will move down after hours. So let's look at TSM to kind of see. I am up on this currently, but I do believe that we are going to see it. Yeah, it's 1 day from earnings. I probably will sell it. I probably will sell this one straight away. I probably will sell this one. So I may do that during the show here. I may sell it, but I definitely going to sell it before it comes through earnings, because I do think it's going to back off a little bit there on that as well. So there we go. Your thoughts on Vive or CRM? I can't decide which one to pick. Well, you know what, Mr. Said, I think Vive is probably the better, but let's just take a look at them side by side so make sure that, I'm not giving you a story here. Vive is looking really, really strong. And by the way, if you've been looking at it for a while, you'll know that I was trading Vive very, very strongly last year and into the beginning of the year at about the 170 level. So this one has just performed just phenomenally well. But basically we do have a buy zone on it at even at 306, it's probably a good. The pivot off of a flat base is 298.76. So that's a pretty good pivot. We're up a little bit above that. I do think this is probably going higher. Let's look at the criteria on it. Boy, it's got 100% checklist. That is excellent. And let's look at the ownership on it. Increasing ownership. We love to see that. It's Fidelity Contra Fund. That's the best. Wow, this is really good. Vive is looking really strong at buying it right at this level. So we're going into a breakout kind of range. Now, I like CRM, I like Salesforce, but it's a little bit of an older stock and it doesn't have quite as good a relative strength. So I'm looking at, it's also got a checklist of 100%, which is tremendous. I just don't think that we're at as good a buy point on it as we are on with Vive. I think Vive is the better of the two. I think they're both excellent, by the way, but I think Vive is probably better of the two. The thing about Salesforce, it's a much, much larger company, harder to move than than Viva Systems. So going back to Viva, we're right at that buy point on Viva. I love to buy them when they're right at the buy point on a flat base. I think of the two, I think you got to go with Vive in this setup. It's just got a better setup, and it's a little bit more powerful with a 93 relative strength as opposed to a 91. So that's kind of where I am at there. My calls are up 100%. Only bought 2 though. Oh no. You know what? The fact that they're up 100% now. When you're playing calls, and I don't necessarily, when you're playing calls, the best way to play them is take your money faster than you would if you had the regular stock. If you have the regular stock, you want to probably hold it a little bit longer. With calls, if you're up 100%, I would sell at half of them right now. Take your profit. Nobody ever went out of business taking their profit. Take some of your profit off the table. And then just get ready for the next, because calls, the thing about calls is that they have a limited time frame, and we want to capture the profit when the profit is. The thing about calls is that, when the profit is there, it's a good idea to kind of maximize that if you can. So that's good. Okay. So for NET, I do think I've been selling calls, to be honest with you. I've been buying the underlying shares and then selling calls. I think Cloud Flare is excellent. I think it's looking very, very, very strong. On the calls. But if you're up, I would consider possibly taking some of your profit, because I do think it may back off a little bit depending on how far out your calls are. So it may back off a little bit on that, and you might want to be careful on that. So just want to be upfront with that. Now let's look at TikTok. Thank you for waiting, everybody, on TikTok. And by the way, all of my things are basically on they're all of my stuff is basically on YouTube at youtube.com/DallasTradingFloor. So let's take a look. What do you think about Workhorse? Okay, we got a Workhorse question. Let's look at Workhorse right now. WKHS. It's done pretty well. It's in a good space. They make truck bodies for electric vehicles, so that's very good. It's pulled back a little bit. Let's take a look at that on the screen. And by the way, if you're looking on TikTok, just go over to www.DallasTradingFloor/ and this is episode number 150. So on Workhorse, taking a look at that, we are pulled back a little bit out of the, we're still above the buy zone. The buy point on this one on a consolidation base, stage 1, 22.90. It's at 26.52 right now. So we are extended above the pivot fairly significantly, but this is a relatively low price stock. So my guess is that that's not necessarily a bad place to buy it. You may not get another chance to buy it at the pivot, but there is a chance to buy it possibly at the 21-day exponential, and that's at 26.77. So you could buy it here. It's not as good a place to buy it, but it's not bad. It's 77%, which means that it's 7 out of 9. That's very good. It's not as good, of course, as Cloudflare or Fastly, but it's still very good. We do have increasing fund ownership. I do like to see that. The sector on the industry, well, it's looking fairly good. Not as good as Cloudflare or Fastly, but quite good, quite good. So in the automotive, I think this is excellent. It's got a relative strength of 99. Those are definitely ones that you want to be in. So all of those looking pretty good on Workhorse there. Looking pretty good on Workhorse there. I definitely like to buy stocks that have a relative strength of 99, because that means that the stock is outperforming all of the basically all of the S&P 500. It's in the top 1% of all stocks. So that is very, very good when you ever get a stock like that. Your thoughts on Pool? Is it breaking out? Thanks for that. Okay, great. Yeah, man. Thank you for putting it out there. I'm trying to give you as many breakouts as I can. Pool Corp, is this breaking out? Let's see. It does. It is above the buy point. That is true on a cup with a stage 2 cup. 342.50 is the pivot, It's 352. So it's $10 above the pivot. Is this breaking out? I would say no. This is not breaking out. It's not a bad stock, but it's not really breaking out that I can see. This is not necessarily a breakout. It's not a but there has been a lot of buying action. So I'm looking at this. Yeah, this is really good. 1, 2, 3. So about 4 days ago, there was a lot of buying action. It looks like it's moving right up the 10-day exponential, the 10-day line. And so I'm looking at, I would see if this thing pulls back a little bit. It may not. I mean, this is essentially a pocket pivot. It may not pull back, but this is not necessarily a breakout. This is not a breakout. I'm afraid it's good, but it's a pocket pivot, but I don't think it's a breakout. At least not yet. It might turn into one. It might turn into one. All right. Thanks for that thing. I think thoughts on Penn National. Okay, Penn. By the way, there's also a competitor that's called DraftKings. I'm not sure if you're familiar with them, but Penn National is a little bit different than DraftKings in that it's in the sports gambling area, but it has physical locations, which is so important in this business. So in some ways, I like Penn National and DraftKings, but unfortunately, it just hasn't been doing as well as DraftKings. And here's the chart on it. Basically, we're pulling back a little bit below the 21-day exponential. So let's look at the weekly chart to see if we can find a buy point on it. Not really. There really isn't a buy point on this one. The last pivot on this one was way back. It's basically a stage 1 pivot at 37.43. Currently, it's at 65, so it's pretty extended. It looks like it's tracking the 50-day line. So potentially, it's buyable there. But at this point, I don't really like this. It's only 5 out of 9 on the Bryan criteria. The ownership is quite good with 61% funds, and we are increasing. But I don't like this as much. Yeah, I just don't like this as much. Let's look at DraftKings to compare it. It's got a 98. It's got a really high relative strength though. 98 is excellent for relative strength. So let's see if we can come up with something that might make sense. Let's look at DraftKings. Let's compare them because these are the two comparables. It's DK, NG. I think it is. Is that right? Yeah, DraftKings. There we go. I should know this one offhand because I look at it so much. Okay, here we go with DraftKings. DraftKings is up today, and it's got a buy point a little bit closer at 44.79. It looks like it's moving up the 21-day exponential average, also 98, but it typically has it's a little better. It's just a tad better on the checklist. 6 out of 9. This is my minimum for buying, by the way. And we've got 34% funds. That's excellent. We've got Fidelity Contra Fund. Okay, so out of these two, Penn National and DraftKings, I would have to take DraftKings. I think it's a little bit stronger. Would I buy it right at this level? Well, I'd be a little bit careful. I'd want it. Yeah, it definitely is buyable at this level. I kind of want to see it pull back to the 21-day moving average. I mean, to the 50-day moving average, which is at 45.19. It's about $5 above that. So I don't know if I would buy it right at this point. I would wait, hopefully, maybe for another pullback and reversal. I think that might work. But it's 98 relative strength, so it's very strong. And we had a Easter egg just a few days ago, so it's looking pretty good. Let's look at the daily chart to see if we can get any strategy on that. Yeah, it's fallen below the 21-day exponential moving average. It's going to trade right at this line. It's probably going to reverse off of this line. So if this went higher to about 52 on a reversal, which it looks like it's doing, then we might want to be in it because it's looking like very nice strength. So yeah, this is definitely buyable. Out of these two, Penn National and DraftKings, I think that DraftKings is where you want to be. Just my opinion on that. Thoughts on Vive and Etsy? Well, we went over Vive. I think Vive is excellent. Etsy is also good. So let's look at that as well. Let's look at Etsy. to see kind of, and this is really in that strong, very, very strong space. Now, there is a trade idea. Instead of doing Etsy, why not do eBay? They have a much more a larger audience. Of course, it's old school, but there is a buy point on Etsy at 141.41, which looks very good, actually, very, very good. We're right above the pivot. We're right in the buy zone. Let's look at the kind of the criteria for buying it. It's got an excellent checklist, 8 out of 9. Boy, you can't beat that. Ownership is very good, 64% of funds. It's got Fidelity Contrafund in here, which is sort of the good housekeeping, seal of approval. 97 relative strength. So, boy, this is looking strong. Let's take a look and compare that to eBay to see if there's any comparison there. I think Etsy might be the better of the two, but I think it's worth looking at eBay because eBay has been kind of a laggard, and I think it may be coming back. Well, we'll see though. Let's just take a look at the chart because that's going to tell the tale. We do have, it's trending above the 20. It is still below the 50-day line. I don't like that. We're below the pivot point, so this is not quite as good. Yeah, checklist is not nearly as good. Okay, out of these two, you're going to have the play is definitely Etsy. So that's the play over eBay. So that's a better one. Now, in looking at that compared to Vive Systems is also very, very strong. It's a little bit more expensive, obviously, stock, but it is at 93. It's a stronger stock, at least right now, and it passes 100%. Boy, if you're looking at both of these, the better of the two is Vive, but Etsy is a very strong stock and very, very good area that it's in. The e-commerce area is very strong and just a great place to be. So I like them both, but of the two, I like Vive better. Tesla this week. Well, let's look at Tesla. And of course, everybody knows I'm a Tesla bear still, and I've been in and out of Tesla since last year. So we've done okay on it. It looks like it's pulling up a little bit today, and it looks like it's just right on this, right on the 21 days. So let's see if we've got. Yeah, this is the weekly chart here. The next buy point on a consolidation basis is 502. So will it get up to that level? I'm not so sure if it will do that. It'll probably take a month, I think, but this is a spring ready to pop, and it looks like it's going to happen, but the question is when. It's got a relative strength of 99. Excellent. We're basically very, very close to earnings, 9 days away. Am I going to hold it through earnings? Well, this time I probably am. I'm probably going to hold it through earnings just because I believe that I do believe it's going up from here. I did sell a 450 call, so I will be holding this through earnings. Earnings, of course, are in just a few days, and who knows how that's going to come out. So I will be definitely holding it through earnings on that. So let's see. Next question from TikTok. Okay. Will Apple go above 127 this week? Well, I think it may. I think it may go above, but it's only going to be short-lived. I think really where you have to be right now is I think you want to sell it right either tomorrow or possibly today. I think you want to sell it. I think it's the kind of thing you don't want to hold more than more. I don't think you want to hold it into earnings. I don't think you want to hold it into earnings. Really, that's just my opinion on that. So, anyways, that's where I'm at. Okay, so let's see. Next one. Okay. Just ordered your book. Hey, thanks, man. I wish it was my book. It's by Willie O'Neill. William O'Neill probably is one of the greatest stock traders ever lived. He's still alive. He's in his 90s, actually. He's originally actually from Dallas, which is incredible. He went to Woodrow Wilson High School, if anybody there knows it. But he's been in Los Angeles area for many years. He's the founder of Investment Business Daily, and it's really great that you take a look at this. Take a look at this book, look through it. It explains a lot of things that nobody else explains. The question is, why does the stock go up? Well, he explains it. He explains a lot about how chart patterns matter, how growth stocks investing can be more profitable than fundamentals. So there's a lot of great things in that. And thank you very much for taking a look. And it's super easy to get it. All you have to do is go over to my site, and then I have a thing called the Learn to Trade bookshelf here. And basically, it's this book. It's the orange cover here. Just click on that, and you can get it right away, and you can have it in a day or two. It's super great. I also like this companion book by Matthew Gilgani, how to make money in stocks, getting started. And this is sort of like checklists, and this is very, very helpful. So these two books are great to get together if you want to get started in cancel investing. And believe me, I was introduced to this many years ago now, and it changed my life. Initially, I didn't follow it. I went to the business school, and I went in California and State University and the whole thing, and did the fundamental analysis, worked for Price Waterhouse, the whole thing. And you know what? I wish that I had taken my instinct and said, read the book, How to Make Money in Stocks and Winning System, Good Times or Bad, and taken that to heart earlier than I did in my career. Since I've done that, boy, things have changed, and it is the way to go. So that's a great thing to see. Follow through day. Probably, here I am saying probably, there was a follow through day on Thursday for the Dow, but not for the NASDAQ. I do think we're going to have that. So I will be reporting it as soon as I know, as soon as I know on that. Thoughts on HYLN. Let's take a look at HYLN super quick here and see what we're going to do on HYLN. HYLN. Yeah, right. And this is Hill & Hollies. This is a provider of powertrain solutions. So it's definitely in the emerging electric vehicle industry. So that's a good thing. So let's look at it. Well, it's fallen off a little bit. This is a little bit speculative. We did have there was a pivot on this at 34.87. It's now 20.28. That's not a good thing, but it has a relative strength of 79. This is definitely, it's potentially a buyable stock, but let's look at the criteria. It's only 4 out of 9, and unfortunately, because it's only 4 out of 9, it's really not strong enough yet to buy. We like to see them a little bit stronger, a little bit settled down. There definitely is an increase in the number of funds. That's a good thing. I think this is a watch list. I wouldn't buy this right now, but it's coming. The time for this is coming soon. But for right now, no, I couldn't recommend this. I can't recommend this for you, unfortunately. So it's unfortunate. I wish I could, but I can't. Microsoft or Facebook? Well, that's a great thing. I would say Facebook, but let's take a look at both charts because I think that will tell the tale. Let's look at Facebook first. Facebook is one of my favorite stocks, by the way, and I have owned it numerous times. It is basically running up right up this 50-day moving average here, and so it's in a consolidation base. So right now, it's not an optimal time to buy it. It would be optimal if it exceeds 304. Right now, it's at 275. So I want to see this move a little bit higher before I buy it. But let's look at the criteria. The checklist is excellent. It's 8 out of 9. It doesn't get much better, except for 9 out of 9, of course. And we have increasing fund ownership. We have a lot of funds in this. Also, we have a lot of very, very good ones. Fidelity Contra Fund owns 9% of this. This is probably the largest holding in Fidelity Contra Fund. And so this is excellent. This is the good housekeeping seal of approval right here. So that is very, very strong. The only thing my only problem is it only has a relative strength of 81. I say only 81. 81 is an excellent relative strength. But compared to some of the ones that we're looking like Cloudflare with a 99 or FSLY with a 98, this is not as strong, but it's still extremely strong. But let's look at and compare that to Microsoft to see which one we would have to choose between the two. And Microsoft, of course, is, I think, everyone's favorite. I started trading this very seriously a few years ago, about 3 years ago, when it exceeded $68 a share, and it hadn't exceeded that since 2000. So that's really when it started to heat up. Now, currently, Microsoft is trading at 221. It's moving right up the 50-day moving average, as you can see. Let's go to the daily chart so we can kind of get a better look at it. Yeah, it's moved right above the 50-day. That's good. Now, here is something that's concerning. We're starting to see some acceleration, which is good. If you'll notice, the green line here, this is the 21. This is this is below the red line. The red line is of course the 10-week, and so it's moved above that. So that's good on the daily chart. There's very good volume. But do I like it in compared to Facebook? No, unfortunately not. It isn't as strong as Facebook. Facebook is currently in a stronger phase. So if between the two, between Microsoft and Facebook, I would have to take Facebook. Facebook just is stronger right now. The question is, where can you buy Facebook? At what price can you buy Facebook? And I think the only real place to buy Facebook right now is at the 50-day line. So let's pull it back. Yeah, it's right at the 50-day line. That's where you want to buy it. So let's look at the daily chart to see what that price would be. About 287 is where I'd really, let's see if, yeah, 269, 266 is where I'd want to buy it. So would I buy it at this price? Well, you can buy at this price. It's a little bit extended, but in this kind of market, I think that might be the best you're going to get. Now, there is one caveat here. It's only 17 days in front of earnings. I'd be careful if I bought it at this time. If I bought it now, which I do think it's going to accelerate into earnings season, I would sell it on the day of earnings. I know that sounds strange. Buy it and then hold it for 17 days and then sell it before the earnings. Well, Facebook is likely to pull back after earnings. That typically is the pattern. So, that might be something. But of the two, of Facebook and Microsoft, I think you got to go with Facebook. I just think you have to go with Facebook right now. It's just a little bit stronger. They're both great, though. What price would you sell Fastly? Good question. Good question. Let's look at Fastly. And, of course, that was the trade alert for last week on the action trade alerts. Let's kind of look at Fastly, kind of where it's gone. It's moved very, very nicely above the 117.79 price, which is the pivot on it, basically. And that is a stage 1 pivot, which is even better. And so where would I sell this? Well, I would wait until we achieved a price of about 20% above this. So I would be looking to possibly sell this in the 135 to maybe 155 range, but it depends on how fast it moves up. If Fastly moves up more than 20% in less than 8 weeks, which I think it's likely to do, then I wouldn't sell it. Now, if it hung out and it moved up 20% in about more than 8 weeks, then I would sell half of it at least. But right now, it's moving too fast to possibly do it. So I think that really, I don't think you could sell it under about 135. That would be about the minimum that I'd even consider it at. But right now, I don't think you should sell it. FSLR, is that an actual breakout? Let's take a look at FSLR. That's FSLR, right? Yeah. FSLR. Is that an actual breakout? First Solar. Is that a breakout? I would say no, based on this. But let's look at the daily chart. Yeah, okay, that's the daily chart. Yeah, it's good. I mean, it's definitely good. Let's go to the weekly chart here. But this is not a breakout because the pivot on the first stage cup is 81.87. It's at 79.31. This is not a breakout, though it might break out. Now, it's got a relative strength of 90. That's excellent, but There are better ones. There are better ones than that. 7 out of 9. So this is definitely a watch list. There's no question. This is a watch list. But this is not a breakout. This First Solar, and it's not a breakout stock. It might be, but it may set up, but it's definitely a watch list stock. But unfortunately, it is not a breakout stock at this point. But it's definitely something worth putting on your list. What about Tesla? Okay, well, let's look at Tesla again. And Tesla just remains this amazing stock, an amazing company that seems to be just, it's a little bit, it's what's happening now with Tesla is you have what they call a basing move on the stock. I know I'm throwing all these technical terms and it sounds confusing, but actually a lot of this you can find out by going and, if you're interested, some of these terms, by going to the Learn to Trade bookshelf on www.DallasTradingFloor, How to Make Money in Stocks. This kind of explains sort of my lingo, what I'm talking about, because it sounds like it's just Greek, but it's all kind of explained in there in this book. So it's a great place to get it. Easy to get it. Just go to www.DallasTradingFloor and then the Learn to Trade bookshelf, and it's How to Make Money in Stocks. Anyways, just thought I would throw that out there for you to see. So getting back to Tesla, it is essentially in what they call a basing pattern. As you can see, it's kind of moving up and down here, and it's moving this trend line is moving very nicely. It's still a 99 relative strength. This is amazing considering how long it's been a 99. A 99 relative strength is extremely hard to do because that means that it's outperforming all but basically it's in the top 1% of all the S&P 500. That is a tremendous stock. When you see a stock that's a 99 or a 98 or a 97 or a 95 or a 96, anything 95 and about, take a look at it because those stocks are outperforming the market big time. Now, that said, we're coming into earnings, so that's going to explain some of it. Depending on how the earnings are, this could gap up or it could stay flat. My guess is it's probably going to pull back a little bit after earnings, but Tesla is very, very hard to figure out. If their deliveries are really good this time, and I think they might be, we might see this thing actually move up just based on my experiences with the stock. In terms of where to buy it, well, right now, basically the only place you can buy it is at the 21-day, and that's at 421. It's at, so it's a little bit extended from that. It's about 442. I would, I just think that you might not be able to buy it at that low level, but definitely I do believe that in the near future, we are going to see it crest above this 502.49 level, which is where it made its peak. And this was back basically in late August before the little bit of the correction happened. We had a 10% correction from the third week of August basically into September, and then it started moving. But once that correction happened, it then starts moving right back up. This is the characteristics of a very, very strong stock. So I do believe it's going to achieve this level, but it probably will not be until the December timeframe. But for right now, this is not necessarily a bad place to buy Tesla at 442. So I do think, though, if you're buying options or anything like that, you want to make sure that you're probably buying at a little bit longer time frame, and maybe and that's going to be expensive, like a January or so option on Tesla above 500, because I do think that's where it's going, but it's not there yet. So that's kind of that's definitely my take on it on Tesla. But it's just continuing to be strong, and I think at this point it's not necessarily a bad place to buy it as well. Hey Jim, what are your predictions on Apple after the big announcement tomorrow? Well, I do think it's going to pull back. I do think it's going to pull back a little bit on. This is just typically the way it works. Now, it's not because there's anything wrong with the iPhone. The iPhone is a tremendous product, but I do believe that there's going to be a situation where we don't get as much of the upside because it's such a widely held stock. The thing about Apple is, there are tremendously large people that are in this. I mean, Berkshire Hathaway is the largest shareholder in this. So there's just a lot of people with a lot of that are in the stock. So it's much harder for this thing to move than a Tesla, which is not as widely held. That said, I think this is going to be a tremendous announcement, but I don't think the action is going to be as much in the Apple stocks themselves. Now, I may be eating crow here, but my guess is that the best time probably to hold it is to hold it into the announcement, sell it possibly end of today or early tomorrow, and then wait to see what happens. I do think it's probably going to pull back. Now, how far it's going to pull back? I don't think it's going to pull back that far. But I do think it's going to pull back, and I do think it's going to pull back to the 21-day exponential line. And I do think that's going to be about 118. That's sort of where that's sort of where the resistance seems to be. So I do expect that it's going to move up, into this announcement. Probably it's at 124.40 right now. I suspect it will move probably into 125, maybe higher range. And then I do believe it's going to pull back, and I have a feeling on Wednesday or Thursday it may be back as low as 118. But I do see some strength at 118 on a pullback. But I do think it's going to pull back. That's just my take on it. Now there are some other things that you can do to make hay while the sun shines, and one of them is that there are some companion stocks that are going to do very well and that may pop, and those are Qorvo, Skyworks, and Marvell. So let's look at Qorvo. We haven't looked at that in a while. QRVO, and this is an RF stock. I think they're going to do very well. They're in a buy zone right now, and this is a 5G stock. It's called Qorvo. Its relative strength is 88, which is, I like to see it stronger than this, but it's still very good. It's in a buy zone. The consolidation base 136.06, and it's in that base. It's off a little bit today. It's got a very good checklist. Not a great 7 out of 9, which is excellent. Typically 7 out of 9, 8 out of 9, 9 out of 9. Those sorts where you want to be. It's in a lot of the funds are in it. It's got an increasing fund ownership, which is good, and Fidelity Contra Fund is in there. I like to see that because that is a sign of strength. Where do I see this one? Well, this one might benefit the most from a 5G rollout. Qorvo is one of them that might benefit very, very nicely. Another one, of course, is Marvell Technologies. I think Marvell is probably the better of the two, but and that's the one I'm in. It has pulled back a little bit. It's also less expensive. Not that that's a good thing or bad thing. It just is. It's got a little bit stronger relative strength, whereas Qorvo was 88. This is a 91 relative strength. This is a 5G stock. It's also 8 out of the 9 on the checklist, so I think that's demonstrably better. Also, Fidelity Contra Fund is in it. Love that. And it's in a great sector. So out of the two on that I'm looking at for the 5G, I'm not looking as much to Apple itself, but I'm looking at some of the companies that make chips. And one of the ones that I like is this Marvell Technologies, symbol MRVL. So that's Marvell. Okay. All right. Okay. So it's Workhorse seems to be falling right now. Is there a buy point? Well, we could definitely look back at Workhorse. People seem to like this stock. The biggest issue that I see with Workhorse is I don't think that they have a very good moat. That's a kind of a Warren Buffett term, meaning that they don't have as much. There's a lot of potential people that could come in and compete with them, and I don't think that's a great thing. That's one of the issues with this stock, but it still has an incredibly good relative strength of 99. So that is excellent. I think what's happening is it's pulling back to the 21-day exponential. Let's look at the weekly chart. Just kind of make sure. Yeah, this is definitely, potentially a high tight flag. Potentially is. So this is a very, very bullish. Very, very bullish. Where is the buy point on this one? Well, let's see. The last buy point really is 2290. It's 2290 on Workhorse. So it's a bit extended from that at 2658. So it's a bit extended from that. It's a little bit out of the buy zone. Let it pull back a little bit. Let it pull down to this 21-day exponential. I think you could buy it if it closed in on 2454. I think that would be a good place to buy it. So definitely, Workhorse is a good company, but I do think that they may be seeing some increased competition just just coming in. So you don't know. Okay, net, which is of course Cloudflare, which I got wrong in my little video. I said that I bought the stock, but I didn't pronounce the things right. So it just goes to show you don't necessarily have to know everything about a stock to buy a successful one. Yeah, this is doing extremely well, as you can see. It's really just kind of taken off on the daily chart. Let's look at the weekly. And the weekly chart is just looking very strong. I mean, it really is. The buy point on this one was 45.28 basically, and on Friday I put out a buy alert on this one. This sure said it's sort of everything going for it. It's back down to a relative strength of 96, so it is losing a little bit of its relative strength, but there's very, very heavy buying in this stock. So I do think that at least for a while we're gonna do very well. And of course the checklist is 9 out of 10, so that's pretty good. Ownership, well, we have increasing ownership. That's very nice. And we have the Fidelity Contra Fund, which I love, of course. And I keep talking about that, but that's a really good indicator of, who's buying it. And, basically for everyone out there, when you have somebody like Fidelity Contra Fund buying it, that means that's really what sets the stock up to go much higher. It's not individual investment. It just isn't an individual investment. That said, if you want to get on a list for free action trade alerts, super easy. All you have to do is go to www.DallasTradingFloor, and then just click on that, and I will show you exactly how to do it. This is Dallas. This is a view of Dallas Trading Floor, and this is how the homepage looks. Subscribe to our free action trade alerts. So right there, first, last, and email. Hit that subscribe. You'll be on the list. It's totally free, and we will give you all those action trade alerts. So that's a way that you can participate in these great breakouts. We're coming into a season when there may be some very, very nice opportunities to make breakouts. So that is a good thing. Thoughts on SunPower? SunPower. I don't know the symbol on that. Let's see. SunPower. If I can get a symbol on that. SunPower. Okay, SPWR. So let me go back to SPWR and get that up. SPWR. There we go. SunPower Corp. Boy, that's an interesting chart. Thank you, Jorge. Jorge, I appreciate that. Yeah, it's pulled back a little bit, but it's like marching right up that 21 exponential. It's relatively inexpensive stock, 1652. That's excellent. It's in San Jose, like that. I used to live there. High performance solar technologies. Wow, so proprietary process. This is okay. It's got an Easter egg. Yeah, you may be onto something here, Jorge. This is looking good. SPWR. Let's look to see kind of some, let's kind of get a look see to see if yeah. Okay, it's a 6 out of 9. That's my minimum. That's good. The ownership, very good, very good. No, it doesn't have Fidelity Contra Fund, but it definitely has increasing fund ownership. I'm liking that. Let's look at the sector. Wow, the sector is #1. You can't go better. You can't go wrong with that. Wow, this is looking very, 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 very good. Now, where would I buy this thing? Well, let's look. Let's see if there's any place to buy this on the daily chart. It looks to me that the only place to buy this really is on the 10-day line, and that is basically at 1507, so it's 1652. You know what? Let this thing pull back. Let this thing pull back to see if it hits about $15. If it does, and it reverses, I think you might have a winner here. SPWR. It looks like it's pulling back today. But it looks like it's coming up, and it looks very, very strong. My only downside on this one is that it's a little bit thin in terms of its size, but it's 2.8. Well, not really 2.8 billion, and the relative strength is this is good. So what I would do, wait until this thing pulls back to about the $15 level. I think you might have a winner here on the stock. This is a very good place to be. It looks like to me. So this looks like a very, very good potential. All right, so let's see about people from TikTok. Thanks for waiting. Tom Talk about Apple. Okay. Well, I do think that Apple is going to do. Apple is going to be the strongest right before tomorrow. So when do you want to sell it? Well, I think you want to sell Apple tomorrow. You say, why would you do that? Well, here's the thing that happens a lot of times in the stock market. It's kind of a strange thing. The stock will be the strongest right before a big announcement or earnings, and even if they're really good, and I think they will be for Apple. So that's when most of the excitement is going to be at its peak. And as you can see, we've moved up very nicely. We've sort of gapped up there, and we're at 124.42. And I think we've closed. Yeah, we've closed definitely. So tomorrow, I think you're going to get a little bit of more juice. It's going to go above 125, but then I think that if we get up to anywhere near 127, 137 is the peak. But I do think we're going to pull back tomorrow after the event. So I would be a seller probably in the morning or into the afternoon. That's just my opinion. We also are 17 days in front of earnings. Well, what you could do is hold it into earnings. That might be the better strategy with Apple. Hold it into earnings. That's 17 days from now, and then sell it the day before earnings. I think you're going to get the high there. You might get up to about 137. I don't think it's going to move beyond about 140, even up to earnings. And I do think it will pull back a little bit because the slope of this does not say that. So we may see, because this is going to be good, depending on how well this goes, you might want to hold it, and I've been recommending selling it before the event, but you might want to hold it through the event, the 5G event, and then before it goes to earnings, and that's really the key date, is to sell it. So sell it right before earnings, sell it in about 16 days. I think you'll get the top amount of profit that way. And then if the thing bounces back after that, then you can go and go into the market and buy it again. So just because you've sold doesn't mean you can't buy it back. So it's just good to protect your gains by selling it into the earnings. So that's that's what it is. Okay, I can't believe I didn't execute before the market closed today, Friday. Okay, well, sometimes it happens. That's the way it works. That's just the way it works. You got to look. Please advise on Run. This is a cool company too. Let's look at Run. RUN. And this is called Sunrun. Oops, let's get that in there. Sunrun. There we go. Sunrun, and pull that up on the screen. There we go. It's pulled below that 21 days. So it looks like it's pulling down, but it's still 99. Let's see. What are we doing here? Let's see if we have, what I can advise on how to play this. Okay, the checklist has moved down. I don't like this. We're only 5 out of 9. I would be a seller probably, just based on that. 74% funds, which we do have increasing fund ownership. That is good. The industry is excellent. What is happening? I think it may be correcting, but let's take a look to see kind of what the trend is on that. And we do have a trend issue here. So it does look like, is it breaking trend? I think it is breaking trend. It looks like it's going to move below that line, that red line that I just drew. So I think that maybe time to it, at least for right now. Now we'll see if it bounces. I do believe it's probably going to bounce on the 50-day line. That's this red line here below the thick red line, and then there's a thin red line. I think it's going to bounce on that. But I would probably, looking at this chart, I'd probably be a seller. I'd probably be a seller right now. And then see if it reverses. If it reverses, I'd buy it on the way back. But I probably would be a seller on this one. So there we go. Fastly last week. Yeah. Well, Fastly's been a cool one. And thanks Marianne for watching. So appreciate it. Let's see. Are we keeping Fastly or are we selling? Well, I'm keeping Fastly at least in the short term. I'm keeping Fastly at least in the short term. Now you bring up another really good one, the CrowdStrike. This is an interesting play because this is very much of a stay-at-home stock, and the reason it's so good is because it provides that end-to-end security for the people that are working remotely. So that's a very strong business these days with everybody working from home. Let's take a look at the chart. I just want to look at the Bryan criteria on this really carefully. It's got an excellent checklist. 8 out of 9. That's great. And Fidelity Contra Fund's in it. I'm loving that. Industry and sector. Well, the industry rank is excellent. It's in the top third. So where to buy this thing? Where would you buy this? Well, let's look at the weekly chart to find a kind of an entry point. This is going to be a tough one to enter because basically the last buy point of the actual consolidation base first stage was about 118.58. So it's at 145. So it's a little bit above that. So where could you buy that? Well, the only real place to buy that is on the 21-day exponential. And if we look at the daily, that is basically right about here, 137.82. It's a little bit above that. I would wait to see if this pulls back. Well, you actually can't even buy it at the 21-day. You're going to have to buy it at the 10-day. That spread signal, the only place you're going to be able to buy it. If it pulls back to about 142, then it's possible that you could buy this. This is going to be tough to buy because this is being, the funds are definitely moving into this one. This is a good stock. 96 relative strength. I'm liking that. I like them 95 or better because 95 relative strength or better. That means it's outproducing all but 4% of the S&P 500. So very, very good. I like this stock, and I like CrowdStrike. I have to say, I like this. Apple. Well, again, with Apple, on my comments earlier, I think you can hold it through the 5G day tomorrow, but I would probably be a seller before the earnings. Earnings are in 17 days. So I would not think that this is going to, I think this Apple has the potential to pull back to about the 118 level. So I would be careful with this one. I would consider possibly selling it tomorrow or possibly selling it in 16 days before the earnings. So that's where I would be on that. How is BE looking? Well, let's look at BE. See if we can come up with something there. BE. All right. Loom Energy. This is the one that, it's really interesting. I didn't know about this one. We have earnings in a few days. The chart isn't looking too bad. I mean, it's not looking too bad. So let's see if I can give you a kind of a criteria for buying this or not. Checklist is good. It's actually 7 out of 9, so that's pretty good. The ownership is excellent, 42% funds. The sector is unfortunately not that hot. That's the biggest problem. The energy sector just has been plagued, unfortunately. We have a 99 relative strength. Would I buy this one? I probably wouldn't. I would wait until it based, but this relative strength at 99 is extremely good. So this is definitely a watch list. I just probably wouldn't be a buyer 17 days into earnings. I just wouldn't be. But again, it's a good stock. So, it's got a good chart. So I can't really be too negative about that. Okay, well, I have spent an hour and I have got to most of the questions. Basically bought bought apps at $30 based on your analysis and sold today, made 20%. Excellent. I'm loving that. What's your next buy point? Thank you, Dinesh. Thank you. And by the way, if you please like me for that, please like me on YouTube for that. I appreciate that. Thank you. Thank you for bringing that up. But yeah, that's what we try to do. At least I'm trying to do out there is provide some actionable things that can make people money, which is the most important thing. So let's look at Digital Turbine. This is one of my faves, actually. And of course, that's why, because it was a breakout. Where would you sell that? Would you be in that? You know what? I would be in this a while. I would be in this a little bit more. 99 relative strength. It's trending the right way. It's got a very nice checklist. 8 out of 9. That's pretty good. The funds are in it. That's excellent. It's just looking strong. I mean, it's 10 out of 100. It's an area that I really like. It's an area that a lot of people are investing in. I don't think I'd be out of this one. I mean, unfortunately, there's not really a good buy point on this. You could buy it on the 10-day line, which is about 35. But I think that at least for the time being, this is likely to go higher. So APPS, Digital Turbine. So everybody, thank you so very much for seeing me today. We're also, of course, it's if you want to be on the trade alerts, and this is kind of where I try to put out the information related to how I'm trading things and how to make money there. That's super easy. Just go over to www.Dallas Trading Floor, and it's first and last name, and then hit that subscribe button. It's totally free. And by the way, if you're on TikTok, it's super easy to get this. Also, if you'd like to see the charts and everything that I'm showing, it's easy. All you do is go to www.YouTube/Dallas Trading Floor, and you'll see everything on there. So without further ado, I will see you tomorrow at 2:30. This is going to be 5G rollout day for Apple, so it's pretty exciting. And thanks, and stay